Hi everyone, my name's PK. Here I have Daniel Musa here with me, who's bought a fantastic property in Queensland, in regional Queensland. In this video, we'll kind of go through Daniel's background, but we'll dive, really quick into how he bought this property. Really hot market. He actually beat a buyer's agent, I just learned, to get this property. So he'll kind of take you through the process of, engaging a property manager, negotiating in a hot market. The property he got for $410,000. The rent will be around $440,000. So it's positively geared, even if interest rates go up a little bit. Like, there's no need to be afraid when you get properties like this. So without further ado, Daniel, thanks for making time, like I was saying before. And once again, congratulations.
No problem. Thank you so much, PK. Thanks for having me, man.
No,
Yeah.
From the very start, when I had that call with you as well, however many months ago, you just have this kind of it's kind of cheesy, but you very upbeat persona, like positive.
Yeah, I tried to, man. Everyone's sleepy around me these days. I've got to sort of pump some energy into people, to keep it going. So
Fair enough, man. Well, maybe just take us through your background. Like, what do you do? Where do you live? Like, why are you interested in property investing?
Definitely. So I'm 25 years of age at the moment, 25 years young. I'm from Blakehurst, Sydney. I was looking at property investing probably almost more than a year ago, but sort of tried to take the easy way, like what's hot now, where are people buying and all that stuff. And, went engaged a buyer's agent probably about 7 months ago and, decided probably, not the best areas where he was buying, not the best areas to buy after I started doing my research. So obviously came onto PK's course and done a bit of research and saw things a little bit clearer, luckily. So I, just try to speak to a few real estate agents, and I actually came across a real estate agent who referred me on to the building and pest inspector. And I actually found the property through him, So, obviously prior to that, going through properties, speaking to the property manager, give me a bit of feedback, is it close to this, is it close to that? So she helped me a lot, actually, a fair bit. And I was lucky enough to sort of negotiate one off market through unexpected, a building inspector. So it was really long time coming. It's a very, very probably impossible for me to buy, close to impossible for me to buy on market at the moment there. So I was pretty lucky for that one.
And so I just want to dig into it a little bit, if that's okay with you. You talked about building a relationship. It's really through relationship that you got this deal, and it's really hot there. It's really hard to buy on market. Definitely. Sometimes people say, I'm sure you've heard this as well in forums, like, why on earth would someone sell a property off market? Like, if it's Correct. Such a hot market, Correct. Why on earth would they not just list it on real estate or domain and get a higher price? What was your experience in your situation? Why did the vendor not list it, or why did the agent sell it to you off market?
Well, I think pretty much the first thing is talking to people. You just never know who has your property, who has your deal. Could be a sales agent, could be, a normal person, could be someone who been at the shop. So you don't know who has your property, your deal. So I guess just speaking to people, and obviously with this specific person, I was speaking to them, asking them about other houses, or, I'd give them a ring once a week, always checking in, ask them about other deals and stuff. So he pretty much, as soon as I found that he wanted to sell, he was actually telling me there was a real estate and a buyer's agent. One buyer's agent told him, I can buy it off you. A real estate told him, I can list it for you next week. And there was actually photos taken. So for any reason, that real estate agent was just taking his time. Maybe he was confident, I'll slip him in later or something. So he pretty much, I spoke to him and said, I can buy it off you now. I was just like, I'll pay you for it now. I'll buy it off you now. So I think just coming across serious and obviously having your pre-approval there, you just go in, when it's a hot market, just let your guard down and just go in confident. You know what I mean? You're scoring a deal off market, just pay a little bit more or a little bit less, but you just hook them in, and you can get, especially in a hot market. So don't make him go to market, whatever happens. Don't make him go to market.
Don't let it go to market. No. I mean, that's the beauty. If you know what suburb you want, like, you have confidence, what pocket, the type of deal, the numbers that you're chasing, you see it, It's like when you go fishing, when you see it, you're like, I want to hook that thing in real hard. You don't want to let it go. You know, you're fighting it. You're really trying to reel it in.
Yeah, and especially that I've been on this suburb for a few months as well. So I know what they're sort of selling for. I understand the sort of wave of that suburb and how long houses are taken to sell and how much to sell it for. So there was a fair bit of research done as well. So which really, really helped, you know.
No, kudos to you. And it kind of goes to show as well that anyone can build these relationships with agents or building and pest inspectors or property managers. It's not just the kind of, I'm very biased. I always say this, but it's not just the forte or the domain of buyer's agents. Like you actually beat this other guy or girl, whoever it was, to the punch. The agent chose you just to sort of, I don't know, average investor as opposed to the buyer's agent.
Correct. Yeah.
So that's really good to hear. One thing that I wanted to kind of just dig deep on a little bit more, if I can, Daniel, is the use of property managers. So where are you based?
So I'm in Sydney.
You're in Sydney. You bought this obviously in Queensland.
Yep.
You didn't catch a flight. You had all the local due diligence done. Tell me about the process of finding or selecting the property manager. Talk to me about the process of them doing the due diligence and you trusting that they're doing it properly, that you trusting that they're not just trying to, just tell you that everything's okay, just to make a deal or close, some revenue. How did you go about all that?
Well, I think, initially finding this property manager, so after speaking to her a few times, I just knew she was honest, like she's been in the industry for 20 years and, and man, I can't stress how much she sort of guided me through things, like she'll be able to, even though she's busy flat out, she'll be able to sit there and talk, I think this property is good because this reason, I don't think you should go there. Like I actually put an offer in another property and the offer got accepted and she replied to my email after the offer got accepted by half an hour saying, look, there's a lot of, public housing close to the area. I don't think you should buy there. So she literally saved me from going forward in the deal. But I definitely think it's important, man. It's just, to have someone that's been in the industry, been in the area for 10, 15 years, it just someone with general knowledge, he can, they can really save you and push you forward. They really can save you.
I don't know that, it's actually good to hear that the property manager told you not to buy a property because it's so easy for them just to say, yep, Daniel, hook that one in. And then, they've got your property management business for the next 10, 20 years. It's so easy for them to do it, but it's sort of not everyone in the property industry is a shark. It's good to have good people around you.
Yeah, there are.
And maybe the last thing I'll ask as well is you bought in a hot market. It's a hot market around Australia. Many locations are incredibly hot despite interest rates rising. What would be maybe some advice that you could give to people who maybe not even in part of my course or anything, just, they're just interested in learning, that keep missing out on properties, that are becoming frustrated. Maybe agents aren't even calling them back. Now that you've been through that process, you've been successful, is there any kind of gold nuggets or pointers that you can share?
Definitely. I think two big ones is just, if it is a hot market, just stay persistent. Like I said in the beginning, you just never know who has your deal. Just stay persistent. If you've done research on a specific suburb or two, it's going to be good, then it's worth the wait. You know what I mean? It took me, 2 months or close to 2 months before I actually landed this property because there was such a resistance and it was very hot, but I just knew I can, I can find something. So I think just, stay very, very persistent. If it is a hot market, it's okay to sacrifice, an extra $5,000, $10,000, $15,000, as long as it's within reason. You do know after researching when a suburb, has a lot of rental demand on that rent will increase in the future. It's that extra five, like I've missed out on properties because of 10 grand, because of 13 grand, it was, but yeah, I think definitely be a bit more confident, and just stay persistent. Like you will find your property but you just never know who has it. Doesn't just have to be a real estate agent or a buyer's agent, but just speak to people and speak to, building and pest people and just whoever's in the market, anywhere, anyone that's around close doing what you're doing, just always network.
Yeah, don't be shy. I think that's what you did really well. You just picked up the phone. No one's there to bite you or anything like that, right? They
Yeah,
just
yeah, definitely, yeah.
just pick up the phone, don't be shy. Now, this is a really good point, because sometimes we're a little bit scared of giving $5,000 extra or maybe $10,000 extra for a property. But if we're spending $400,000, it's going to rise that by that much by the time we settle anyway. So instead of not buying and then
Yeah,
not settling, you might as well settle. And by the time it settles, it's worth that much anyway. The bank honors it. It's
yeah,
all good. Otherwise, you're waiting another year before buying, and prices have gone up
that's
100,000.
exactly right. Yeah,
Um,
it's
no, really good advice. Thanks
yeah,
for sharing
definitely.
that. And maybe last one,
Yeah, yeah,
very selfishly, for people who maybe are in your position or the position you were in, you'd engaged a buyer's agent, you weren't entirely satisfied, or maybe they haven't even engaged a buyer's agent, but they're considering my course. They're kind of
yeah,
on the fence. Is it worth
yeah,
it? It's a lot of money, $6,000.
yeah.
What would be your advice to those
I
folks?
think, guys, look, I think it's um me buying the course. Obviously, initially, I thought it was a big amount, but what it really saved me from was worth a lot more than what the course would have, would have set me back. It's for you to be able to know how to do things on your own. It's a lot cheaper than relying on the person next to you to do the work for you, knowing that they will not care about your money as much as you do, and that's one thing I learned through this process is people really don't worry about your money as much as you do. So if you think, however many $1,000 to buy this course or to buy a course is a lot, think of, how much you could, the wrong deal you could buy and how much you can waste then, like if you buy a property and it doesn't move for 4, 5, 6 years, how much would that cost you? So I think, look, it's definitely just get over that little step of, paying X amount for a course and just it's really worth it. It really is worth it.
Yeah.
You are your best investment.
Nice. You are your best investment. I like
Yeah,
that.
definitely, definitely. It's like this one guy, Jim Rohn. He says, "You think investing is risky? Wait till they give you the tab for not investing." It's everyone's sort of cautious with their money, or is this course or this property? It's just be confident, do your research, and jump into the market, back
Yeah.
yourself and jump in. Yeah. So
Especially in like this sort of environment where inflation is high. If you keep your money in the bank, even if you're getting 2, 3, 4%, inflation's running at 5, 6, 7%, your money's going backwards. Like I feel that a lot of people don't realize that. They see, oh, I'm getting interest in the bank, but you're actually going backwards. Like that's
yeah,
the reality.
yeah, yeah.
Um,
It took me actually years to realize that my money's getting weaker. Dad always used to tell me, buy a house, buy a house. I said, no, it's all right. When the time comes, what if I bought, 3, 4 years ago? You know what I mean? You always think that. And in 5 years from now, people will think I should have bought. It never stops. So just, get in there, guys. Get in there.
no, great advice. And you're on the journey now, you're on the train and looking forward to your future purchases as well, Daniel. And
Yeah,
once again, like thanks for putting your trust in me and congratulations.
yeah, definitely paid out, man. So no, it helps a lot. Helps a lot, PK.
Cool. Thank you so much. And thanks for watching, everyone. Hope you guys got a ton of value. If you have any questions, you can put them in the comments. I'll reply. Maybe you have questions around how Daniel got it off market, or how he got it under market, or the positive cash flow side of things, or what the growth projections are, anything like that. Just leave in the comments. I'll definitely reply. Maybe Daniel will as well. And give the video a subscribe, give it a thumbs up, give it a like, all that good stuff. And yeah, we'll see you next time. Thank you so much, Daniel.
Thanks a lot, guys. Take care.
Catch ya.
Bye-bye.